So Bitcoin itself gives you multiple opportunities that the ETF does not. So for example, you can self-custody it, you can bring it around the world, you can use it for its monetary purposes. But not everybody currently needs or desires that use case. So if you don't foresee that you're ever going to want that use case, the ETFs can make sense for people. They have retirement accounts, they have managed assets, they have traditional brokerages. And so to the extent that the ETFs are now an option, I view them as better as GBTC has been. So now GBTC is also an ETF.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin. According to Lyn Alden, there are many things you can do with Bitcoin that you can't do with an ETF, for instance. You can take care of it yourself. You can take it all over the world and use it to make money, but not everyone wants or needs that right now. Case study, that is, if you don't think you'll ever need that use case. For some people, ETFs make sense. Some of the things they offer are retirement plans, managed assets, and standard brokerages. So in that case, there are now ETFs to choose from, and Lyn Alden think they are better than GBTC. Now, GBTC is also an ETF. The bad thing is that they charge more than some of these younger ones. And so in general, Lyn Alden said, if Bitcoin price risk, and if I had a savings account, I'd probably choose one of those cheaper options like the Fidelity or the BlackRock or these other inexpensive ETFs if Lyn had GBTC and a savings account to her tax expert, because you might get hit with an unexpected capital gain tax if you don't always look for the lowest fees, and lots of things Lyn Alden discuss, so please watch the video to end, and share this video and subscribe our channel Everyday Finance, thanks.
But try to own whatever's scarce because in either scenario, you should benefit in the long term. So things like Bitcoin, equities, cash flow producing businesses, ways to earn a good income, high quality real estate that's not in bubble valuations. For example, you buy those things, and to the extent you use leverage, you use it cautiously and particularly in periods of lower rates to make sure. Again, it's unfortunately like a game of blackjack, where generally if you're not using any debt, you're kind of the people other people are dunking on, right? You're the one that's kind of not benefiting from the situation. But of course, if you overuse leverage, then you're one of the ones that Bitcoin itself gives you multiple opportunities that the ETF does not. So for example, you can self-custody it, you can bring it around the world, you can use it for its monetary purposes. But not everybody currently needs or desires that use case. So if you don't foresee that you're ever going to want that use case, the ETFs can make sense for people. They have retirement accounts, they have managed assets, they have traditional brokerages. And so to the extent that the ETFs are now an option, I view them as better as GBTC has been. So now GBTC is also an ETF. The downside is its fees are higher than some of these newer ones. And so generally, if I had, for example, Bitcoin price exposure in a retirement account, I would probably rotate towards those cheaper alternatives, the Fidelity or the BlackRock or these other low cost ETFs. If I was holding GBTC in a retirement account, I would talk to my tax advisor, because there can be, if you not always chasing low fees is the right answer, because you could get hit with an unexpected capital gain tax.
Yeah.
So, she's in New Jersey. I'm in New Jersey as well. And so we have the benefit of pretty good money as far as global monies are concerned. And we have the benefit of a good housing market and S&P 500, right? So our money's not as broken as others, and our savings, we basically monetize the equity market for our savings. That's what a lot of us do. And so it's easy for us to look around and say, what's the purpose of Bitcoin? I think when you look at the use case for it, you have to look at the global marketplace. There's 160 different currencies out there, and many of them do not have attractive equity markets or real estate markets for people to invest in. The question of liquid savings is very hard. I have a friend who's a physician in Egypt, and he literally stacks physical dollars like under his mattress as part of his savings, because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency. So it kind of comes down to, he's got a little bit of real estate, but that's illiquid. And so it comes down to dollars, gold, and assets like Bitcoin and things like that. And so another complicating factor is that, let's say, for example, if I send money to a graphic designer in country XYZ, maybe it's Egypt, maybe it's Nigeria, maybe it's Argentina, they often will receive it in their local currency at a fake exchange rate, and they still have the problem of, what do I keep my savings in, or how do I make sure I raise my prices each year in line with the monetary debasement that's happening.
According to Lyn Alden, one cool thing about Bitcoin and other stablecoins is that they can get the money they want through their own banks. As long as the country isn't on my list of banned ones, Lyn Alden wouldn't give money to an Iranian. Even though Lyn know how to do it as an American, you should take that chance. However, Lyn can send them as long as they're in a country that lets me getting it to them can be hard because of their local payment system. Lyn Alden can send them stable coins or over a call like this. They can show me a QR code and Lyn will send it to them. They can then send me a direct message, DM, or an email that says, "Here's how to pay me," and Lyn Alden will do it after that. They got their full pay. They can also save if they want to leave their country. They can take it with them as Americans. We don't really think about leaving our country. Let's back to the Lyn Alden interview.
And one of the cool things about Bitcoin, or stable coins for that matter, is that I can send them the money that they prefer around their local banking system, as long as it's not a sanctioned country for me, right? So for example, I would not send money to an Iranian, even though I would have the technical capability to do so. I wouldn't take risk as an American. But for example, as long as they're in a country where it's fine for me to send it to them, we can go around their local banking system, which is the problem. I can send them stable coins, or I can send them Bitcoin over a call like this. They can hold up a QR code and I could send it to them. They could send me a DM or an email saying, "Here's how to pay me." I can pay them. And then now they're getting their full rate, and they're able to save it. They're able to bring it with them should they leave their country, which as Americans, we don't really think about leaving our country. But if you're in Lebanon, if you're in Argentina, if you're in Venezuela, like I personally know someone who moved from Venezuela to Canada, and he brought Bitcoin with him, whereas many other Venezuelans just leave penniless as they try to flee, because it's very hard to actually bring value with you outside of countries that have that problem. And so I think that the main answer I would say is think globally and think about a kind of a board with 160 different currencies. Most of them are rapidly devaluing. Most of them have capital controls to varying strengths around them. And things like Bitcoin and stable coins give people more options to self-custody money, to receive money they want, to go around, financial borders and things like that. So one of the main questions is, to what extent could it impact inflation? Because that can impact forward expectations of Fed policy and bond rates, which can then impact equity valuations, for example, or even things like Bitcoin valuations. But let's focus on stocks and bonds here. So to the extent that the Red Sea remains largely closed, that's an ongoing moderate-sized inflationary pressure that's, it's up against other disinflationary pressures. To the extent that things exacerbate, and say the U.S. government, U.S. military gets more involved in certain regions, that can exacerbate the fiscal deficit and result in more bonds coming to market than were otherwise expected, which again can be negative for interest rates. It can be problematic for interest rates and therefore problematic for equity markets. It can force the Fed to monetize debts that they would have otherwise not wanted to monetize because they're trying to be hawkish. And so those are the main things. There's kind of that baseline question of what if the status quo continues, and then the longer term question of, are there nonlinear events from this? For example, if we fast forward, a year or 2 years, there's questions like, is Iranian oil still getting to the market or not, right? For one reason or another. Or is the Red Sea still open or closed? There's things that can kind of spiral negatively should certain things escalate. And so those are the main things: is, does it disrupt energy? Does it disrupt shipping more than it already has? But I think the biggest outlier question is, what happens? Does it affect energy in any sort of really meaningful way?
According to Lyn Alden, one of the key questions is how much it might change inflation that can have an effect on moving forward. What people think about Fed policy and bond rates can have an effect on things like the prices of stocks and even values of Bitcoin. But let's talk about stocks and bonds for now. In the sense that the Red Sea is still mostly closed, that's a steady, moderate amount of price pressure. It's up against other forces that try to bring down prices. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.